The government of Kenya is expected to unveil a $22.9 billion budget for the next financial year, with a key spending focus on infrastructure, security and energy. I spoke to Stanley Ngundi, a tax manager at Ernst & Young, on some of the concerns as the country heads to a new fiscal period. Take a look.
I think we still have the same challenges we had over the previous years, very low absorption rates at the national government, looking at the ministries and parastatals. And the case is even worse at the county government, where we are looking at some county governments not even being able to absorb even 50% of what they were allocated. This will mainly relate to lack of capacity and also technicalities that will normally revolve around what we have in our constitution in terms of what approval processes need to go through for you to be able to access the funds that have come through. So it's not new. Still quite low absorption levels, but we can also laud the president at the national level. He's actually instructed the ministries and parastatals that have not been able to absorb a significant portion of what they've been given. They've just been asked to give back the money, and the money will be directly channeled to infrastructure in the next financial year.
Now, looking at the bigger picture of this 2.1 trillion expenditure between 2015 and 2016, would you say that certain factors of the economy have improved, for example, the quality of life?
There's still a lot that needs to be done in terms of reaching out to the common mwananchi. Issues to do around service delivery to the common mwananchi. You've seen, especially this particular government, they've come a long way with the Huduma centers and all that. But generally, we can say with an economic growth rate of 5.8% and the trend that has been set even in the near past, there's actually a better quality of life even for the common mwananchi. Also tied closely to what is happening due to devolution. We actually have some significant funds at the county level which are able to trickle down to the common mwananchi.
How do we improve absorption of development expenditure? Right now we are at 14.3% nationally.
Most issues revolve around accessing the funds. What regulations have, what procedures you have to go through to access the funds. And another big challenge that we also need to push back to Treasury is we've had very many instances where funds are released quite late to the counties. Like now we still have counties that are receiving monies for the last financial year. And we are talking about, for the current financial year, and we are talking of about a month or a month and a half to go. So it becomes quite hard for these counties to absorb these monies. And come the end of June, you'll still find these amounts lying in their accounts, and they have to be returned back to the national government.
Now, coming into the next financial year, we are looking at yet another big budget, 2.3 trillion Kenya shillings. What will be our spending priorities? In the past, we've seen security and education and also infrastructure being some of the big winners for the budgets.
Yes, we've seen a lot in infrastructure and security, but I'll mention again, there's a move towards investing so much in what we call socially visible projects, especially because we are getting into an election period and the government of the day wants to create an easy platform for their re-election. So we are talking of a lot of investment in things like the education sector. We are talking of 13 billion going to the laptop project. This is a project that will reach down to the smallest of the common mwananchi. They will be able to see it and actually feel it. We are talking of more than 20 billion allocated to the health sector to set up new health institutions and also improve on existing ones. And also a lot allocated to what we'll call social justice funds, including CDF, equalization fund, and quite a huge chunk of 6 billion to try and clean up the mess caused from the 2007 election. So 6 billion allocated to finally relocate the final batch of IDPs. And all these are quite visible projects to the common mwananchi, and it creates quite an easy platform for the government of the day for an easy re-election come the next elections.
Now, the Kenya Revenue Authority has not been able to meet its revenue collection targets for the past year. Going forward, are we looking at a position whereby they are going to widen the tax net, or we are going to see introduction of new taxes so as to raise as much resources as possible locally?
Yes, by the third quarter, KRA had a shortfall of around 65 billion in collections. We are projecting it to rise to around 85 billion by the end of that financial year. It's quite wanting, but what you'll notice is that year on, KRA has also improved on how much they're collecting at an average of around 11%, comparing what they collected last year, and they're still on track this year to collect more than 11% of what they collected last year. We commend the initiative for bringing in consultants, especially at this point. There are questions revolving around how KRA is run, how procedures are run. Where are we having certain taxes not performing yet? We're investing so much in terms of initiatives, including technology and iTax and such. And I think once the government puts its head together with the consultants, which looks more like the focus going forward, we should expect to see more productivity from KRA. I think the ground has been set. There's not really much more we can do for the structures at KRA. It's a question of improving how things are done at KRA and what relationships they have with the taxpayers to be able to increase and meet their targets. The infrastructure is there, and we believe the people are also there.
What's your take on the quality of borrowing that the country is conducting at the moment? Because we've seen, like the Eurobond, we are borrowing to pay other debt.
Yes, there are plans to go for another Eurobond around August, September. Our borrowing is worrying, but I've mentioned we are still not at the breaking point. What I would push for is quality debt. If you're able to borrow and really put up projects that are able to be felt by the common mwananchi or improve the livelihood of the common mwananchi, I will not be talking of issues about us borrowing too much and such. What we are doing is borrowing that is not more like well-informed, or we borrow and don't spend the money to projects that will be able to generate more money. Essentially, we end up borrowing to projects that either collapse, or we end up borrowing to end up paying debt. So essentially, just push for what we call quality debts. Borrow to finance projects that will really improve the life of the common mwananchi and will really contribute to sustainable development of this country.